choose what type of company you want to buy, and we're selecting 4 companies. The first one is Victoria Gold. Why do I like it? Because not only is it a producer, which means it's going to benefit from any upside, but also it's an explorer. So you can get that exploration kick without too much expense, and you can also get the value of a producer. I visited that property several years ago. It was an excellent trip to the Yukon. It's one of the best jurisdictions for many, many reasons. You certainly don't have to worry about expropriation. You have a very friendly and very rich and mining-friendly area. It does very well. John is every company always likes to say that they're undervalued and have good management. And John has very good management, has excellent management board. We just added some good people recently. It's a company you want to watch. We presented it for over 3 years for good reasons. Anyone who bought it, you can hold it and come back in 5 years and know you're not going to lose your money.
Hey, again, welcome everyone. My name's John McConnell, the President and CEO of Victoria Gold. Now we have the usual forward-looking statement, and then we'll go to the highlights on Victoria. I think that sentence across the top in quotations sums up Victoria and our Eagle Gold Mine. I stole this from a BMO research presentation back at the end of July. A large open pit mine with a long reserve life in Canada is just about the best asset to own in this current high gold price, low oil price, low exchange rate environment. So in terms of Victoria, the strengths, we achieved commercial production early in July. We still continue to ramp up to full production, and I anticipate we'll be in full production by the end of the year. We're still tweaking a few things here and there, and certainly COVID has had an impact on our ramp up. It's taken a little longer than we anticipated. But I'll remind you that in full production, we'll produce over 200,000 ounces of gold per year at an all-in sustaining cost of less than $800 per ounce. So let's just talk about those numbers for a minute. I'm like Henry. I'm not sure where gold's going to level out or if it's just going to continue to climb. But even at $1,800 gold, that's $1,000 US per ounce margin we make. So 200,000 ounces, this little company will be cash flowing over $200 million per year. Now, the reasons the costs are low is, number one, we have an extremely low strip ratio. I think, if you look at the average in the industry for heap leach operations, it's closer to 6 to 1. And here we are at less than 1 to 1. And just what that means is that for every ton of ore we mine, we only move 1 ton of waste. We also have a 76% recovery, which is quite high for a heap leach operation, and a Canadian producer. Now, some of the opportunities for increasing the amount of gold is, number one, we only stack on the pad the 9 warmest months of the year, as per the feasibility study. So mid-December to mid-March, we stop stacking, and that's so that we don't freeze a section of the pad. Now, we've been through one winter, and we successfully did a little bit of stacking, and we did some experimenting. We now think there's potential to go to year-round stacking. It may take us 2 more years, but that adds an additional 40 to 50,000 ounces per year, bringing us to well over 250,000. The other really exciting thing is that the current open pit goes to roughly 300 meters, but with better gold price and changing economics as we pay back the capital, we think there's potential to go down to plus 650 meters And then our exploration potential I'll talk about, but we certainly have some very promising exploration. Now, I'm just going to put the skip. As I go to the next slide, a video will start, but as I said, it doesn't seem to work on this system, so we'll just skip to the next slide. There we go. So just to remind you where we're located, we're in Canada's Yukon Territory. You see us geographically roughly in the center of the territory, just north of the community of Mayo. We have year-round road access. The mine is tied into grid power, so we have low-cost hydroelectric power. And the community of Mayo is about 65 kilometers away. It's a small community, but importantly, it has a full-service airport. So I can leave Vancouver in the morning, connect through Whitehorse to Mayo, drive to site, and be there in time for lunch. So very good connections. Technical report, we put out an updated technical report last December. It had been 3 years since the previous report. The resource went up 25%. The reserve went up 25%. Grade stayed the same. Annual production went from 200,000 ounces per year to 210,000 ounces per year. Cash costs stayed roughly the same, but the all-in sustaining costs went up about $100 because we now include the cost of financing and the 5% royalty that's on the project. But even at $1,300 gold, you can see our NPV is well over $1 billion, and at $2,000 gold, the NPV is over $2 billion. So very leveraged to the price of gold. The ramp up I talked about, it's going very well. And I broke it into categories there in the top left. Mining's 100%, primary crushing 100%, secondary crushing I show as 95%, and that's because we're seeing some higher wear than we anticipated. So we're redesigning some of the chutes and making those changes over the next couple months. Overland conveyor to the leach pads 100%. Stacking conveyors, similar to the secondary tertiary, we're seeing some higher wear, so it means some adjustment to chute angles and changing out to different liners. And again, that's being addressed over the next 60 days. ADR, or gold recovery plant, 100%, and people were at 100% staffed. Two questions every investor should ask a new mining operation. How is the grade reconciling, and how is the recovery reconciling? In terms of grade, we sample all of the production blast holes, and we have a sampler on the belt that takes the material out of the leach pad. So we assay all those results, and we reconcile them right back to the original ore reserve block model. And I can tell you we're seeing excellent agreement there. So that ticks the box for grade. In terms of recovery, this is a heap leach operation with a long cycle time of close to 150 days. And you have to appreciate that we're constantly putting new material onto the pad. So it'll be at least another 6 months before I can definitively say we're seeing the recovery we expected. But I can tell you that to date, we're seeing very good reconciliation on the recovery. In terms of exploration, we have a very large land package in the Yukon, over 550 square kilometers. And you can see on this map, we have some 14 targets that we want to get to. It's only the last couple years we've started to step out from Eagle and look at the regional potential. We started with airborne geophysics, where we saw anomalies. We got on the ground and did ground geophysics and ground geochem. Through that, we prioritize the targets, and a target out to the west or out to the east called Nugget became our #1. It's another large granodiorite intrusive, very similar characteristics to the one that hosts the Eagle deposit. So we built a road out there last year. We got out there and drilled a couple of holes, and you can see the highlights on this slide from 2019. Some very high grade, long interval intercepts. And that's at a new area we've called Raven on the southeast corner of the Nugget granodiorite. 2020, we've now released, I think, 10 or 11 holes, and you can see again some very high grade intercepts. We still don't have this one figured out, but we've gone from 1 drill to 3 drills at Raven, so I think that gives you some sense of how excited the team is about what they're seeing. And we would hope to perhaps be in a position to publish a resource before the end of the year. Another target we have out to the east is one that's called Lynx. Victoria has never worked this property, but a previous owner did. And so we've been mining the data. And we're quite excited because we think they were actually looking at it the wrong way. We've now applied our Potato Hills model to Lynx and are very anxious to get out there and do some drilling. We've done geochem across the property, geophysics, and we'll be moving a drill there within the next week or so, and hope to get a better understanding of what we have out there at Lynx. In terms of shareholders, I describe our registry as chunky, with Orion Mine Finance and Sun Valley controlling more than 50%. But after that, you can see we have a very blue chip group of institutions that hold the stock. Fidelity, for example, came into the stock in the first quarter of this year. They bought their position in the market, whereas a number of these other funds came in with a little financing we did back in May. Personally, I own more than 564,000 shares, or roughly 1% of the company. And it's important that I point out that I purchased all my shares in the market. We did not IPO this company and give the founders a bunch of penny stock. Similarly, our chairman, Sean Harvey, has a large position at over 300,000 shares. So our interests are definitely aligned with our shareholders. Analyst coverage, we enjoy 5 analysts covering the stock. The most active analysts are Richard Gray at Cormark, Chris Thompson at PI Financial, and Andrew Mikachuk at BMO. And you can see their target prices there. We think there's still lots of room for Victoria to re-rate based on P to NAV. You can see we're trading at about 0.74, and the mean for our peers is more like 1.11, and I see no reason why we shouldn't even trade higher than that. And I think that it'll come as we demonstrate Eagle's potential in terms of exploration, and we show increased production through to the end of the year. So just to summarize, why invest in Victoria? Achieve commercial production, share price re-rate as we move to full production. 210,000 ounces per year is meaningful. To give you an example, if an Agnico Eagle were to acquire Victoria, it would increase their annual production by 14%. High potential exploration targets out to the east. Production increases with year-round stacking, and certainly the mine life significantly extended with higher gold price and mining to deeper levels at Eagle. Now I think we have time for a few questions, Henry.
Yes. What we're going to do first is I want to bring up Chris Eccleston, who is an excellent mining analyst, who will do the first, and then we'll open it up to the audience. So let me get...
So my questions relate to, starting off, the commercial production, when was it declared? And of course, the securities markets in Canada have given exceptions for filing results because of the virus. So when might we see a first set of accounts that show the production and show the profitability?
So commercial production was declared July 1st of this year.
Right.
So our first full quarter is the third quarter, and we've provided guidance for that. So that ends the end of September. We have 45 days to file our financial results based on that quarter. We'll probably put out the production results earlier, but you're absolutely right. Auditing firms have had huge issues with COVID. They're used to going into a company's office where they have free access to all their files, but working from home has slowed them down. I think we're in good shape. It's a very straightforward company and a straightforward first quarter, so I think we'll be right on schedule. So that's, I think, roughly November 12th would be our filing date.
Okay, good. So we've got maybe another 2 and a bit months before we see some positive bottom line. Well, I'm hoping it's positive, particularly with the gold price being where it is. You haven't done any forward sales of gold. Do you have any NSRs or anything out on this?
Yeah, so back when as we started construction and took on the debt, we did hedge 25% of our production for this year and next year. So those hedges are in place, and we're paying into them because the gold price is well above the peak of those. But again, it's less than...
What level were they done at?
See, I don't know can you see this, the presentation?
Yeah, it's coming up.
So there's the hedge. It's 40,000 ounces in 2020, 60,000 ounces in 2021. Again, roughly 25%. It was done in Canadian dollars with a floor price of $1,500 and a roof price of $1,936.
Okay, and that's with Macquarie Bank.
Correct.
Okay, and that's the extent of it, though. After 2021, it runs out?
Correct.
Okay, good. So you mentioned Agnico Eagle as, just musing as a potential takeover party. But, with a market cap that I saw was like 1.25 billion, I'm not sure where it is today, you'd be in a position to do some acquisitions yourself.
That's correct.
Would you rule that out?
No, we, right now we're still focused on getting Eagle up and running. That's our number one priority. But, we keep track of what other companies are doing and what other explorers are doing. But, we really think the best opportunity for growth for Victoria is in our own backyard. As I said during the presentation, we have some 14 high priority targets, and we think there's a good potential for 2 or 3 of those to become mines in the future, and that this is truly a district play, not a one-off mine. And we're starting to see a lot of juniors acquire ground and explore all around us as well. So, that's great news. We love to see other people spending their money, and we're the obvious miner of the day at a certain point.
Would you like to get taken over?
You know, I would
Well, of
prefer
course, it's all about price, Henry.
Excuse me one second, John. Before John answers, every time John gave a presentation in New York or in Hong Kong, I'd ask him just one question, and that is, when will you be bought out and what price? And he never wanted to answer that question for me. I asked that
Yeah,
before.
but I don't see why he needs to get bought out with the market cap that he's got, and probably the market cap will go higher as the production numbers start to come in and cash flows. Then then his firepower goes up to become an acquirer himself.
Yeah, that's absolutely right.
But he's got into hiding. Oh, there he is.
And at current gold price, I mean, I don't know whether you noticed, but I'm sure some of your investors have, is we made an early debt repayment of $10 million in July, and we'll continue to make those because we're cash flow at this gold price. We're cash flowing, far in excess of what we anticipated.
Yes. Okay. So that means you're going to be gushing cash. So what about dividend?
What? Say that again?
What about a dividend?
Yeah, we certainly have had preliminary discussions at the board level, and we have a board meeting. We generally have a face-to-face quarterly, but with COVID, we haven't been able to do that. But I would expect that at our board meeting in November, there'll be a lot of discussion about a dividend going forward.
Oh, that's excellent.
Certainly, it's something I'd like to do, and with my shareholding, it's a little self-serving, but I'd like to see us start paying a dividend.
No, that's not self-serving at all. I think it's great because I can think of some other companies that I loathe and detest that refuse to give a dividend because the CEO thinks he's well padded with his paycheck, so he doesn't need to give anybody else any money. But that's obviously not you, so I'm pleased to see that. What was the other question I had? I think that's about it. They're the main things. I like corporate actions, and so if you're on the takeover trail, I'd be very happy to see that. But that'd be sometime down the way. And I'd certainly prefer dividends to stock buybacks. But the thing is here, is there a restriction on Orion and the second largest shareholder, which was what was it? Because they own 52% of the stock. Is there anything stopping them? Basically Sun Valley, just responding to a very attractive offer and selling the farm out from underneath you?
Yeah, so you don't have any agreement in place with Sun Valley, but we do have an agreement, a bit of a shareholder rights plan in place with Orion. They can't go above 50%, and they can't sell without our permission for the next, I think it's roughly 12 months.
Okay, what's the history of Orion with stories like this? Do they sort of sell into strength, with your permission, of course, so that you can actually improve the liquidity? Because looking at this, you're pretty closely held.
They haven't.
Which can be a problem. It's an advantage, but also a problem at times.
Yeah, absolutely. They haven't sold a share. The way they got into the stock was as financing the project construction.
Yeah.
So they took debt and equity. And they still hold some debt. And then, to raise the money, we also sold a royalty to Cisco Royalties. And they took debt or equity as well. And, you know, when we came in on schedule, on budget with the construction, Orion approached Osisco and bought their share of the equity, which has turned out very well for them.
Yeah. Okay, good. Over to Henry and investors to ask their question.
We're going to. So we can, if anyone would like to ask some questions, either John or myself would be very happy to do so. Clearly, this is a real company, and if you're interested in having a gold exposure, it's a very safe one with some very potential upsides.